the other part of it, what had happened was, when the banks were giving loans, financing to all these people who are of lower credit worthiness, they want to get back their money as quickly as possible, and they are also aware that this thing will come. You know, it's a matter of time the defaulting borrowers would set in. But what they did is they create papers out of these loans in the name of derivatives, in the names of bonds, in the names of swap papers, in the names of option papers. And they sell these papers to the market, to investment banks, like JP Morgan, like Lehman Brothers, like Morgan Stanley. These are
this is kind of some kind of security.
It's to liquidate the loans that they can.
In the system.
Yeah.
Okay.
And the investment banks were ready to buy these papers. The market were ready to take these papers because they are given good credit rating by rating agencies like S&P, Standard & Poor, by Moody's, organizations like that. How is it that S&P, Moody's can give that good rating? Because they had an arrangement, they made an arrangement, the banks made an arrangement when they created these papers to have what we call as CDS, Credit Swap Swap, which effectively is a default guarantee scheme by an insurance company to these papers, to the banks, that when there is default, the insurance company policy will kick in to pay for that default. So,
but couldn't there be a cover-up at some point? The books must have been cooked. There were indications earlier that, of course, this thing, people had advanced knowledge of it happening, and the books were simply just manipulated.
Well, you see,
the auditors and accountants.
Yeah, because these papers are sold into the market, and they are not belonging to the investment banks as such, because then they resell also to other institutions. They are not actually reflected in their books of accounts, because it is not an asset that they are carrying. It is neither a liability that they are exposing themselves to. It's a paper which probably mature 2 years down the line, or 3 years down the line, or 6 months down the line, but the backing is from the insurance company. But then, just like the Enron case in America, they have got all these schemes of arrangement in partnership. These are what we call off-balance sheet financing, off-balance sheet assets. Because they are off-balance sheet financing, they are off-balance sheet assets, then they are not reflected and they are not captured in the books of the account. Now, even if they are captured, the problem lies with the fact that this derivative is not supported by substantive assets. There is no asset backing to it. There is no asset base to it. The value comes from this CDS, from the Credit Default Swop Scheme, which is provided by the insurance company. So when there is no asset backing that paper, and the insurance company, which takes some collateral from the housing residential properties that was collateralized to the bank, falls in value, then they cannot meet that default, that guarantee. AIG defaulted about 40 billion.
The American International Group.
Yeah, AIG, the largest insurance company in America, defaulted 40 billion USD at the height of the crisis because of the erosion in the value of the housing. So people are, although they may be reflecting those transactions in their books, but when the value came down, then there is no backing to support that sort of so-called derivative, so-called papers. Then they have to make provisions. When they have to make provisions for bad debt, for erosion in value, then the capital base of these companies, of these investment banks, just went away like that, very, very easily, very, very quickly.
Okay, Mr. Khudus, before we come into Islamic finance vis-a-vis the orthodox kind of financial industry we know about, I just want to ask this question. How big do you think the problem is, and how long will it last?
Well, by some accounts, the size of the derivative market is about 668 billion. That is 15 times the size of world economy, right? 668 billion, the derivative papers that have been issued, which is 15 times the size of world economy. So you take the whole world economy, 15 times of that, that is the value of the derivatives that has so far been created. The subprime lending is estimated at 100 billion in the US. Lending to people who are of not credit worthy group is worth about 100 billion. This is the one that has been causing problems. The derivative problems has not yet really come. Whether it will come or it can be sustained or it can be postponed, that is yet. Now, the problem really started in September 2007. By September 2008, the financial market in America basically really collapsed. You correctly say, when America sneezes, the whole world will catch a cold. That's precisely because American economy is a huge economy, is a big economy. Almost every country in the world have dealings with America, even the big countries or the small countries.
Almost a quarter of the global economic output.
Yes. Yes. So it's affecting the industrialized nations, it's affecting the developed countries, it's affecting the underdeveloped countries. We have gone from September until now, which is 6 months. Some people are of the view that we have not actually hit the bottom as yet. I don't know. By the look of it, probably it will slide further. The readings of the research houses, looking at the numbers, looking at the statistics, the stock market has not really come out.
Despite the massive stimulus
injections, yes.
You talked about, during your presentation, about close to $2 trillion yes. So far.
So far, the stimulus package that has been announced by various governments in the world.
Given the magnitude of the problem, would you call that a drop in the ocean? Or is it significant enough to reverse the trend?
Some statistics shows that the world needs 4 trillion to be back on track, to achieve the kind of GDP, to maintain the current level.
So it's just a question of pumping in the money. Yeah. That's all it is.
Yeah. So that is as of probably last month. If things are getting worse, then perhaps that 4 trillion may not be enough. We don't know. As at the moment, the figure seems to be 4 trillion. Banking institution in America needs 1.7 trillion to be recapitalized for them to be able to get back into their business of lending. Now, American government has announced what, 700 billion? 800 billion? Worldwide, the government has announced collectively 2 trillion. So even if we take 4 trillion that is needed, what has come so far? 50%. Now the question is, this 50%, 2 trillion, when is it going to come? How is it going to come? And whether that will have real impact on the economic activity. If we get trapped into the bureaucratic management of the government or the private sector, or certain amount of it or some parts of it actually, being dissipated in some other form, then the impact would not be as what it is expected to be.
View that actually what we are seeing is the worst side of capitalism, for that matter. Attitudes have not changed, and unless and until that consumption attitude is changed, then never mind the amount of money you pump in. Because here then you're talking about more money, more spending, more money, more spending, more money, more spending. Living habits of the capitalist West. Do you think it is a part of the problem?
There has been a lot of noises, a lot of concerns, this so-called free market economy, which is the basics of capitalism. The Nobel Prize winners of the world, people like Joseph Stalin, people like Paul Krugman, have raised these concerns. Leaving everything entirely to the market to behave on their own is a flawed principle. There has got to be some form of government intervention, government regulation. That has not been happening. Well, certainly not in the so-called free economy region.
Yeah, well, because that kind of government involvement, so to speak, and violates the fundamental tenets of the free market system. Then you talk about small government, then big private sector.
Yes, because
you think government should now come out and to nationalize. Is that true?
Well, it has been happening.
America is nationalizing.
UK is
nationalizing.
Is also doing it because they have.
What kind of signal is sent to the rest of the world?
Well, they need to contain the problem, and they need to contain it very fast, very quickly. I think by nationalizing, at least it is well within the government's hands. The confidence is kept to the level so that the market feels comfortable about it. The management of these institutions, well, supposedly should be having sufficient resources for them to be able to get back into their normal business of lending, if we are talking about financial institutions. So I think the government is taking that measure to contain and to prop back the confidence and therefore build up the economic activities along the way. Now, probably that is one measure that the government will do and will need to do. They have got no choice but to do it, to come in. Otherwise, leaving it to the private sector alone, how much resources that is there to help solve the problem. So it is there, but yes, it is the result of this free market economy, no limit to profits. They want to make super profit, and they want to make super money
and spend more.
If there is resources to support that spending, it is fine. It's just like credit cards, at personal level. If you spend, say, 10,000 a month US, you must be able to pay that 10,000 a month. If you are just paying the minimum, which is what most people are doing, I believe, then basically you are eroding your own capital base, because the rate of interest of this cheap, easy financing is very high. In Malaysia, for example, they are charging 1.5% of outstanding balance per month, which comes to annualize at 18%. But if you are paying only the minimum, that 18% can become what, 20, 25, 30%. So basically you borrow $1, you pay back $3. Where is that $2 coming from? It's not coming from your capital base.
Okay, let's look at